Winston Churchill could certainly be considered a type of oxymoron. As historians have noted, Churchill was outspoken on the sacred rights of smoking cigars and drinking scotch before, after, and during meals, and in the intervals in between. He was also exceptionally active mentally, though, and lived to be 90. Of course, almost nobody would be willing to follow Churchill's example in taking such poor care of their physical health. As life expectancy continues to rise, we should all be doing more and more to ensure that our lives, since for the most part they are going to be long, are also going to be healthy. The American Heart Association now recommends 30 minutes of moderate exercise 5 days a week. Not surprisingly, many large employers either offer gym membership coverage or provide gyms on site. If you're traveling, you're almost guaranteed to have a fitness center in any decent-sized hotel. And you may even have to get in line to use the equipment. Studies have demonstrated that regularly eating processed meats.
All right, guys, you're welcome. This is Charles Brown here, and we are looking at our GBPUSD weekly forecast. This is week 41 that we're looking at. Hello, everybody. I hope you all can hear me and see my screen. Are we ready?
Yes, sir. You can see your screen.
Okay, let's go. Awesome. Let's go. All right. Firstly, I want to thank every one of you here for encouraging us to do what we're doing, because it takes a lot of work and time to keep up with this. But just because many of you are giving us results, that means you are following what we're doing and you are getting results, and that is our motivation. And I'm glad that people are getting results with the trading strategy, system, forecast analysis that we're putting up there to help the trading community. And I'm so excited to be part of it. I may not be famous and popular as of yet, but the little things that we put up there and we help people with, and we are getting results, that alone is very courageous. And I'm happy about that. And so I want to encourage you to subscribe to a YouTube channel. For many of you who haven't been there, let's promote this message. Let's help more people. Are you liking the videos? Subscribe to it and hit the bell notification. And just in case our new series of videos have been uploaded, you'll be the first to have an update of those videos coming in. So I want to encourage you to do that. So if you have not been following us on YouTube, do so. That way, eventually increase your chances of knowing more about this forex market than ever, because we will be doing some series to help especially beginners to come into this platform and then be able to enjoy the benefit of trading the forex market. I know that the forex market is a bit difficult. It's difficult to say, but it's very simple if you understand the rules and you follow what you're taught to follow. All right, today we're going to be looking at the forecast, looking at the week ahead, what the market will be like on GBPUSD. Maybe we might look at one other pair, but the major focus is GBPUSD because that's my favorite pair that I trade. Now, last week, we did a lot of analysis, expecting price. Let me go back to the weekly time frame so that you'll be able to see what I'm looking at. Now, this was the weekly time frame, and I told you that according to what price is looking at, we might still be seeing a push to the downside. But I told you that the reason price rejected at this level, because that was the lowest of the low. You will definitely know when price hit the bottom, there will be a reaction. So there was a reaction. That doesn't mean that we have already begun a reversal or an uptrend. It's just a reaction, like a pullback, you would say, on the weekly time frame. So looking at this phase right now, you obviously understand that, okay, yeah, that is it. That's true. The market actually pulled back and reacted to that zone, that key zone at the bottom. That's the lowest low that the market came to. Now, if you're watching us on YouTube, I will encourage you to leave your questions at the comment section. For those of you watching on YouTube, hit the like button as well. And those of you watching on the Telegram group and also from other sources, leave your questions at the chat section of this platform, and then you'll be able to get answers once we see those questions coming up. All right. Now, on the daily time frame, we saw price acted by pushing up, reacting to this zone. So we did if you watched our previous video, we did a Fibonacci retracement here, and we noticed that price was going to retrace back up here, and it did, reacted. Price reacted to this zone. As you can see, price reacted to this zone. All right. So that was the first reaction that we found that the price did, and then drop. Now, remember that was previous week. Now, this week that just ended, we thought, okay, now we saw a retracement. We should be looking at price coming down to this low to break this low, or alternatively retrace back up to create a lower high. And then we find that price eventually did that. Now, pay attention to this. Pay attention to this daily time frame. I want you to notice something. First, we had price come to this zone. Okay. Price moved away from here. All right. And then we had price coming down to this low. Okay. I want to pay attention. And price rejected from here. Great. Absolutely great. Now price came up here. And what happened? Rejected and created a resistance at that level. So if you're looking at this, you're thinking, what is price doing? How would you know which direction is going? There are two things that will come to mind. The first thing would be, what pattern am I seeing on the daily time frame? I'm looking at chart patterns, not just candlesticks. I'm looking at chart patterns. What am I seeing on the daily? I could see what price I've done in the past, but what's it going to do next? So first of all, you have to look at what you can see now. Looking at the market, printing candles, what has it done? So if we look at this zone right here, there's possibility that the market pushed away from the zone and then tried to head up. But we are still in the downtrend overall, irrespective of this pull up that we have, this rally up that the market did. We are still in the downtrend because structure has not been broken in the daily time frame. We want structure to break. Price need to take off this high to tell us that we are in the uptrend already. And then we can start focusing majorly to buy in the market. But at the moment, structure is not broken. We still have market playing around without breaking any structure yet, majorly. So we see market has not broken any of the structures. So the possible way of looking at this market is to think about selling whenever the opportunity arrives, but keeping our mind open to buy if the market chooses to go up. Now, how do we look at this? First thing, I can see an M pattern trying to form. Now, I mean, W pattern, or we can say somebody will say, yeah, there's a W, there's an M for me. So there's a confusion here. One would say, well, there's an M pattern. The other one say there's a W pattern. But the reality is the obvious one is the W. But the problem is this is a daily candle created an equal top there. So that shows us that something is about to happen here. So there is a state here that we need to pay attention to. And I want to explain that. And that's what I want you to pay attention to here at the moment. Because what the market is doing right now may not be what everyone expects. So is it saying that the market is going to drop? Well, it could be now that we have this pattern form. And then coming to test this low again, depending on what the market allowed, and then push back up. That could be it. Who knows? But look at the structure here. If I move away from this time frame, remember this is daily. If I move away from this time frame to weekly, you see that is a multiple week rejection to the upside. So it shows that price is failing to push up any further. It tried to push up and failed and came back down to create a doji, like an inverse hammer. So it created an inverted hammer and then eventually pushed up again the second time and failed again. But this time, making an indecision. So what am I looking at? Is the market going to engage in a consolidation for a while before making a decision whether to go up or drop down? Or is the Central Bank of England going to make some interventions again like they did to take price all the way to this level? Now, some of you were shocked to see price drop on Friday on GU after pushing up massively and it began to drop. From here, it was dropping until market closed. Why was that? Well, we just on unannounced news, or on what I call the back office news that took place in the government office. Okay, the chancellor to the prime minister was sacked. The black guy that was the finance minister of chancellor to the prime minister was sacked. Yeah, on Friday. And then a new chancellor was appointed. And then they announced a revoke or a reverse of the tax policies that they wanted to implement. So it's as though there's a lot of confusion in the government. So that affected price, and we saw unexplainable drop that was happening on GU on Friday. I mean, it was a chaotic moment on Friday in the market, especially on GBPUSD, where you see those spikes coming up and down, up and down, up and down, and then creating lower high, lower high, lower high until the market closed with several spikes, manipulations everywhere. So we hope that the central bank will come in, but otherwise, what we see right now, based on the state of the economy in Britain or in England, we should be looking at a drop. The market may drop more to cover up this space, but we are not sure yet. So what the candle has shown us on the daily is what we're paying attention to now. So does it mean that we are seeing an M pattern? It could be. It could be. It could be, but we're not sure. But remember, if we put our Fibonacci retracement here and then drag it to this low, and we find that price already broke through this, the 61 level, and came back right into it. So the question is, what is price doing? So let's assume we were to take the Fibonacci level from this spike up to this zone, and we saw price came to the 61 level. And then it came in there, agreeing with the psychological level, which is in between the 0.09 and 10, with about 100 pips difference there. Remember, we're looking at the daily time frame. So what does that imply? It means that the market is coming back to test this zone, because we can tell already, if we were to look at it, the reason for this push up was this candle here, this massive candle on the daily time frame, right? And we can see the wick there at the top of there, just right at the Fibonacci level. So we can have a confluence right there. That's a confluence right there as a strong key zone. Price drop, break, retest, came back down and pushed back up again and come back to retest that same zone, aligning with a Fibonacci level. And what happened? Price pushed all the way back up and then rejected at that level and then started coming back down. Now, the question will be, where is price going? Price is coming back to test this zone the second time. Now, if he break this zone the second time, then it's heading down. There's nothing stopping it from heading to create an equal low here. But if it stays and rejects after pulling down and reject, so what do we have? We will have another clean W pattern that shows a double top, a double bottom at this level, and then the market shoots up. So one will be targeting this zone as a first area of taking profit, and then the next zone will be the other one, the third zone will be the other one. So to keep our head straight, we need to understand what the market is showing us right now. First, is this, because there's already a bearish candle. This is a bearish massive candle here, creating massive weak rejection at this zone. So it shows that price is not pushing up at the moment. Price is not pushing up at the moment when we look at it at the weekly time frame. So because price is not pushing up at the moment, we should be expecting price to head down here. So the question is, where is price now? Where is price now? Where is it going? Price just broke through 1.12 thousand psychological level. We saw price just broke through the zone. All right. Price just broke through the zone. All right. Price broke through that zone, which is obviously at the 12,000 or 1.12 thousand Fibonacci level, what do you call it? Psychological level. And then we see price broke that and it might close there. If it closed there, then we should be looking at what next. We have 1100, which is about 100 pips. Then we have 10,000, which is about 200 pips from there. And then we have 1.09, which is about what? 300 pips. So if we look at that from this zone, we're looking at about 300 pips, 270 pips for price to create a rejection. So that makes me think, if price is coming down to this low, that means I should be expecting about 200 or 300 pips or 250 pips for price to drop the low, and then we might be expecting a pullback. So from here to this zone, price may drop it here and then bounces off. Or price may continue in a consolidation before breaking down or breaking back up. So we need to understand that this is a very difficult moment to decide accurately, oh, this is where the market is going to go. And then I'll not say, well, you know what? This week is going to be this way. No, 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 no. That's not what I'm here to tell you. I'm here to tell you to use your mind. Follow the chart. Read what the chart is telling you. Read it. If price take a move up here and came back to retest the zone and bounces off for a buy, and then reject at this key zone and came back down, It's coming back down, which I feel is going to come back down. So the question will be, are we expecting a double bottom here? Or are we going to see a run down as the price break the neck? If price breaks through the zone, then we're going to see a run down. So we'll have this M pattern playing out. But what if price bounces off here? Then we're going to have a W on a daily. So that means there's going to be a reversal that will take place. And then you have something like this. But you see, it depends on what price wants to do. The price may not come this low. He might come to 50 and reject. I just want you to know that. The price may not come this low. He might come to 50 Fibonacci level and then reject. And if that happens, what are you going to do? You buy. But you need to go to lower time frame to see what price is doing. You need to pay attention to the lower time frame to see what price is going to be doing at this zone, because we already have a bearish candle heading down already. Okay, that's fat. So that means between here and here, price is going to play around it this week. That is guaranteed. We can see that price is going to play around this box zone, this zone. Just a minute, let me show you. We could see price playing around this zone this week. And if you look at that place, we're looking at a minimum of 200 pips. All right, that's 200 pips. So just in case on Monday, Tuesday, and you saw price dropping, and if I should say, well, we're buying, then you say, well, this guy is not right, he's wrong. No, I just want you to understand how the market may behave. Prepare your mind for that. So what are you going to do? We play along. We can still see that the sell is agreeing with the overall trend anyways. Come on. The overall trend is still a sell anyway, so we are agreeing with it. So if market push up there and create a rejection, come back here and then fails to create a lower low, then push up again and fail to create a higher high, you see, it fails to create a higher high. You see the mess up in the structure. So we see that price came, drop, create a lower low, pull back a lower high, drop, create a massive lower low, and pull back massively for a lower high, and then drop, and now fails to create a lower low and created what? A higher low. And now created a higher low, and it heads up. We should have been expecting price to break this high to create a new high, right? But it failed again. It failed. And what happened? Price created another lower high instead. You see that? And what is it doing? Coming down. What are we expecting? Either a lower low or a double bottom. Are you getting it now? That's what we're expecting. We either expect a lower low to be created or what? A double bottom here. And if that happens, it bounces off. It may not, like I said, it may not get to the bottom. It may not get to 61. It might get to 50 and then push up. And that is on you to watch out for. Don't be waiting for Charles Brown to come and tell you, hey, we are at the bottom now. No, follow this. Pay attention to what what market is doing. And if I should put again, just to look at something else, from here to here, we could see that price already touched the 50 level within the push-up, and then we see another 61 level, and it's obviously just to think if price was going to start rejecting from there. So it's still within that box. So we might see price coming in that level, reject and push up. We are not sure yet, but we are looking at, let me say, I look at this drop here, all right? Just to ensure that we are in the right perspective. We could see that there was a little push up a bit into the 78 thereabout, and then price rejected back in. So we can see that at this drop, price came up here, rejected again. So we could tell that this is on the retracement level right here. And price is still at the retracement level right here. So that means this drop is a pull retracement and then a continuation. So the possibility of looking at this, that the market is going to come all the way down here, is an equal low. Sorry, an equal low at this zone. But meanwhile, not to confuse you guys, because right now some of you are already acting as though you're feeling like, what's going on here? But you need to, I'm just trying to tell you how to think about this market. Okay, a lot of times you need to look at what the market is doing and then follow suit. So we saw this drop because of structure. Why did I put this Fibonacci here? Because of structure, market structure. Now this is now seen as a what? As a lower high. This is now a lower high for me, a lower high for me. All right, and this is the lower low that we have already, and this one is what? A higher low. All right, so now we have a lower high. You see the structure? Crazy. So what may result may be a consolidation until market break out of the zone to make a decision, or we may have a new lower low created to break this low, this lower high. So therefore, we will now have a pattern called M pattern. All right. Do you understand now? This is how M pattern is formed. The market will first of all create a new high and then push down to create a higher low, and then reject and fail to create a new higher high by creating a lower high, and then dropped by breaking, using this one as a neckline to break it and then continue downward. You get it? That's how the market created M pattern. Now, the same thing, if you just flip that idea, you will see a W pattern as well. But at the moment, we could see this as a W that is still in progress. This market tomorrow might create a bullish run and then start pushing up, and then we'll see inside bar. You see that? But it hardly happened on GU like this. It hardly happened. It hardly happened. So I'm very convinced that the market will still come down as it is coming up. Remember, this is a daily candlestick. So the next day, which is market opens, we're going to be seeing a candle that is going to be coming down like this, because there is so much space for market to trade down to this level. This is where the last time the market stopped. Okay, so we know that the market is going to trade down until it finds a what? A support. The market is not just going to stop until he found a support. That's when it's going to stop. So this is the next available support that the market will come to, and then it will halt, and which align with the Fibonacci level that we're looking at. So if we're looking at that Fibonacci level, not this one that I put here, but I'm looking at the one that took this place up and retracement like this. So if we reject at this level, we'll be having a W. Okay, and you will consider this a new structure of the market heading up. But you will need to break this high to confirm that we are not heading up. You get it? So there's so much time to wait for this to happen. But at the moment, this week, expect the first few days, 1, 2, 3 days, to give you a 200 pips to the downside. So expect this market to drop to this way and expect price action at the zone. So for those of you that understand how we trade in our strategy, you know what to do to go to the lower time frame and then find your key zones in that area, in this area, and you're able to cash the trade. and then take it down, wait for price action here. If peradventure there will be a breakthrough, if the market break this through, remember there's a key zone here as well. Market break through that zone, wait for a retest, and then you sell. And then we'll be looking at all of this taken out. If the central government, central bank will not come in to rescue this market, because the British economy is a bit in a mess right now. It's crashing. So we need that rescue. I for one will want the market to head all the way up. I want the market to start reversing from here, start pushing up, breaking all this high, because I want it. I want to see the end of the said trend. I want to see it. All right, but it appears it's not happening very soon, so quickly. So there's going to be a lot of fight at the bottom here before the market will finally start heading up. I hope you guys understand what I've done so far. And this is what we're looking at in the market. So pay attention to these key areas that I've just highlighted. Not this one yet. This one is too far for the moment. Take those ones out. The major area you should be looking at are this. Okay. These are the major areas you should be looking at where market is going to play around with. You want to see what the market would do in these areas. Remember, everyone here is a day trader, I believe. So if you're watching this, you're a day trader, this is the picture you're going to be looking at. That's why we're looking at the daily time frame to be able to see the movement. So at the moment, we see prices still here, heading down, because we can see from this candle to this candle, the market has space to trade all the way down. And then that will be about 200 and something pips before heading back up, if it will reject at this level. Okay, any question, any comment? Do anyone have a question to ask on this? Hey, everyone is clear? Good? Good? Okay, I think we are all in one page. Your response will be better if I can get a response from you guys. I'll be quickly on the chat so we know where we are, so I can move on. If you want more explanation, you can ask questions regarding what I've just analyzed, and then we'll move on. Okay, all good. So great. So what we're going to be looking at is the daily analysis from now on. So that means on Monday, we're going to be looking at the daily analysis from Monday, Tuesday, Wednesday, Thursday, like that. So that's what we're going to be doing. And for those of you who have already signed up for Expo Peep October edition, on Monday, finally, we're going to be starting our first class. So on Monday, we're taking off. So get ready. And if you are still interested, you're here, you are still interested in signing up, I want you to contact me or the admin and then lay your interest, and then we'll be able to see how we can bring you on board before on Monday morning. Otherwise, you will have to wait for the next one coming next year. All right, because this Expo Peep edition will be the last for the year, I believe. So we might take another one. I'm not sure, maybe that will be next year. I'm still working that out. So for those of you taking it now, you are just fortunate to take it now so that you can get yourself ready for the remaining part of the quarter of the year. All right, thank you guys. I appreciate you all, and that is it. And if you are watching us on YouTube, hit the like button, subscribe. And if you're going to be watching this after today, hit the like button, subscribe, make your comments, contact us. There are links at the descriptions where you can reach us, get in touch with us, join our Telegram group if you want to. There we actually paste daily analysis that you can participate in, so you don't want to miss that. So yeah, thank you guys. And if there are no questions, that will be it for now. I appreciate you all. Bye for now, guys.